Abhishek Somany, Managing Director and CEO with Somany Ceramics, joins us. Now, Abhishek, good morning. Thank you for joining us. Now, for the quarter gone by, let's walk us through the numbers. There is a revenue uptick of 10%, but margins have gone up and profits are up nearly 20%. Is this operating leverage benefit which is kicking in?
No, it's largely due to the gas price numbing. So it's a lot of the profits are coming from there. Of course, there are operating levels in the quarter four, which are general. However, quarter four was still under pressure as far as volume was concerned. We should have done a little better, but margins came back because of largely because of the gas prices.
How have you contracted the gas prices? Is it still on the spot market or this keeps on changing?
I'm sorry?
No, for the current quarter, we understand gas prices have come down further. So when you're looking at forecasting the raw material gas prices, is it done on a spot basis or these are long-term contracts you have?
So we have three separate plants, one in the south of India and six in the west of India and one in the north of India. There are three separate pricing formulas. The north of India is on the RAS gas, which is linked to the Brent. There, the Brent currently hovering around 75, 76, and is range bound somewhere there. So therefore, we feel that the gas prices would not go south of where it is today, which is approximately 50 rupees a standard cubic meter. In the west plant, where we are getting gas from GSPC, there the prices have come off to about 45 rupees a standard cubic meter. And in the south, you're very right, we are on spot. There, the spot currently at 56, but there the forecast is that it should be around 50 in the very near future per standard cubic meters. And I think the forecast also remains the same. The most accurate forecasting we can do is for the northern plant because that is on a 3-month moving average of the Brent.
Morning, Mr. Somany. Wanted to also understand your outlook then on individual segments. The sanitary ware segment, the capacity utilization at about 55%. What is the reason behind that lower utilization rate and how are you looking to improve it?
So the markets were dull in the last 6 months. So therefore, we had to shut one line. We have two lines. We were running only the larger part of the line, and therefore the capacity utilization is slightly lower. This would fire up somewhere in first quarter so that we would be back to almost full capacity fairly soon. So that is the outlook on the sanitary ware. Although sanitary ware and bath fitting is looking very, very positive for us. There is a lot of scope in this sector, and the Honorable Prime Minister's Housing for All and Swachh Bharat only augments that demand.
That's good to know that you're looking at a strong growth within that segment. So in light of that, what is the outlook on your overall revenue picture? Because you have achieved a revenue growth of about 10.5% this time around. Can you just walk us through whether that was largely revenue-led or volume-led growth?
It was largely volume-led growth, a little bit of revenue. And going forward, the forecast also, if you look at our numbers, annual numbers, we are up about 18.5, about 19% on our total revenue. 10% of that is out of volume and the balance is out of revenue. Going forward, what we feel is we should be growing in the mid-teens, largely led by volume again, 10 to 12% by volume, and the rest would be out of value. That's the outlook for this year. Of course, having said that, this year again, April, May has started with a little bit of a sluggish demand.
Okay, fair enough. What about your current market share in the tile manufacturing segment? What does that stand at and how are you looking at this segment growing? Will it be as good as the sanitary ware segment?
The the tile market is approximately 38,000 crore rupees in India, out of which the organized sector is approximately 23,000 crore rupees. And we get 2,500 of that figure. We do hope to gain market share in the coming years in the domestic market. The export market is not a very large market for us.
What I wanted to understand is what is the export opportunity that you foresee right now and how is it that you're going to scale that business?
Yes, so the export opportunity for India is excellent. We have become the second largest player in the world and extremely competitive as far as exports are concerned. And a lot of the other countries which have put an anti-dumping on China, India is the next best option for those traders abroad. So therefore, if you look at 4 years ago, the trajectory of export has been from 4,000 crore rupees annually to this year approximately 12,000 crore rupees annually, and very sharply increasing. So this year we're looking at exports to be anywhere between 17 and 18,000 crore rupees annually, and very soon to touch 20, of which I think a large part is serviced by the cluster in Morbi, all the 800 manufacturers there. The branded segment gets a large premium in India. Export, we are unable to give long credits or extremely cheap pricing like the other players, other unorganized players in India. Therefore, we would get a reasonable share of that larger number. But as a percentage of our revenue, I think export will remain under 5%.
You're sounding bullish on the entire sanitary ware market, but capacity utilization is at 55%. Why is that?
So we had increased capacity fairly substantially. So we have enough to sell. I think it is scaling up. I mean, in the sanitary ware segment, we haven't come to full capacity in the last 2 years. So we did augment a fairly large capacity about 18 months ago. So therefore, that's slowly and steadily scaling up. This year, we would be at full capacity.
What end of the market would you represent you're aiming to cater? Would it be mid-market? Would it be semi-luxury? Because there is a K-shaped economy which is at play now.
That's correct. So two things, two markers there. A lot of our sales is coming from the tier 3, 4, 5 towns. So if I only look at 3, 4, 5 towns, it's about 70%. If I add tier 2, it goes up to 80+% is from tier 2 and under. A large part of that is going in the mid-market and touching the luxury market. So the super luxury market is still governed by marble, granite, and all of those things.
Okay, Abhishek, great to have you on the show. Thank you so much for taking the time out and speaking with us today.